Hello, everyone. I'm so excited. We've got Katerina Schwab, the co-founder and co-CEO of NPX Inc. on the show with us today. We're talking about her brand new, first closed ever structure of this great, innovative, nonprofit impact investing thing. Holy cow. You don't want to miss this. Stick around.
Welcome to Your Mark on the World, bringing you another changemaker with champion of social good, Devin D. Thorpe.
Katerina, welcome to the show.
Thank you for having me back, Devin.
Well, I'm excited because we had you on last year and we talked about this idea conceptually, and you were working on some exciting things, but you've since first closed your first deal, and I wanted to have you back to talk about it. Tell us about this deal that you got done.
Yes, thank you. So this is the first ever impact security deal. It is to benefit the nonprofit The Last Mile. And just to back up a bit, NPX, our vision is to expand the access to capital for nonprofits and to have that capital be based on impact. And so we developed this new financial product called the Impact Security to bring together donors and investors to fund nonprofits in a new way.
Well, it is an exciting new way. And you call these impact securities, and you envision that they will trade. So is this new one available? I think the investors put $800,000 in?
Yeah, that's right. So the Last Mile, the nonprofit, they were our client, and we sat down with them and asked them three questions. How much money do you need over how much time to achieve what impact? It's an unusual position for a nonprofit to be in because often they are backing into RFPs or what donors are willing to donate. And so they were really excited about the process. We determined the impact metric for this deal. They built the use of proceeds, how much they needed, and we then structured the impact security. In this deal, the Last Mile did issue 11 impact securities to 11 investors for a total of $800,000. And this deal is over a span of 4 years. So the investors put in that upfront capital for the Last Mile to get to work to try to achieve impact. And then simultaneously at the launch of the deal, we had 16 donors, so it was very important to have that money in one place. We put it into a donor fund, community initiatives, for $900,000. And so each year there's an impact auditor that measures the impact and then reports to the donors on how much impact has been achieved, and that corresponding amount of capital is deployed from the donor fund to the Last Mile and then out to the investors. So the donors are essentially repaying their investors. And if 100% of impact is achieved, the donors will receive their principal of $800,000 plus that delta of the $900,000 to $800,000 of $100,000, which represents the financial return.
The beauty of this structure, and it's somewhat convoluted, but the beauty of this structure is it seems to get everyone aligned.
Yes.
With achieving the social impact objective, right?
It does. It really, Lindsay, my co-founder, and I, we have experienced the pain points of all three groups, or we have been all three groups. So for the nonprofits, Lindsay was the executive director of a nonprofit. I was the head of development on the West Coast of a nonprofit. We felt the pain of having to raise capital day in and day out. Sometimes it felt connected to our impact and other times it didn't. So we really were trying to expand access to capital for nonprofits at a lower cost. So our goal is to really move from the nonprofit cost of capital, which right now is around 20%, to more in line with the for-profit cost of capital of 5 to 10%. We've been donors, we have, whether it's personally or professionally, and we felt that the best option today is varying levels of due diligence and then donate and then hope for impact. Capital is not explicitly linked to impact. And so we really feel this is a better way to donate. And then investors, as you know, there's an extremely exciting trend that's growing every day with impact investing, but nonprofits have largely been left out. And so the investors have the opportunity for the first time to invest in a nonprofit through a financial product and potentially earn a return linked to impact.
One of the things that we see over and over in the impact investing world and with social entrepreneurs of all sorts is that there is some measure of risk that returns will come only if the mission is diluted or abandoned altogether, the financial returns. And
it's really interesting. One of our investors actually was inside. So the last mile was raising this money for a web development shop inside San Quentin, the first ever. Can you imagine? I mean, here they are sitting in San Quentin, and Airbnb, Facebook, other tech companies are, instead of outsourcing to India, are outsourcing to San Quentin to incarcerated individuals who can code at that level. And so the impact metric for this deal is hours worked in the dev shop. And there's a whole impact spectrum, but we really felt like this would prove if the last miles program and how they do their program is successful, because they would have to train enough of the individuals to do the work and source enough contracts. And so one of these investors came inside and said, to there was just the demo day and the launch of the web development shop a couple of weeks ago inside San Quentin. And he said he's been an investor for decades and that he's also been in the nonprofit sector for decades. And the beauty of a true bottom line of financial and social impact return, his ability to earn a financial return and them achieving the hours worked in a successful program, which leads to so many great outcomes. It had never come together that clearly and aligned in any other investment that he had done. So we really are trying to set up the nonprofit for success, to do the work that they want to do, that they believe they're the best to do, and really making sure not to dilute the impact and setting up those impact metrics way up front, I think, is the way to do that. I know that in impact investing, sometimes that impact metric can change over the life of the deal, and they might not know exactly what they're going for. But these nonprofits, it's meant to be flexible capital. They do know what they're trying to achieve. They might have to pivot along the way, just like we as a for-profit have to do, but they know what impact they're trying to achieve.
In contrast, in so many social ventures, impact investors begin to look at the business and see resources being allocated to mission that aren't generating profits. And so they are stuck in a dilemma, right? Because they face this choice between giving up their social impact to have a financial return or giving up their financial return to have a social impact. And it seems like what you've done is created at least this one vehicle where impact investors are wholly aligned, because for them to get their money, they've got to see the impact delivered, right? So they only cheer for impact.
It is contingent. Their return is contingent based on impact. And even green bonds, they're guaranteed a return if it's positive or negative impact. So we do think this is really one of the key positive attributes of the impact security, that it is contingent based on impact, and that impact, just by definition of us creating these impact securities, is positive for society.
Obviously, I think there's a 3-year window for measuring the return or the impact.
It's a 4-year deal, and it will be the impact will be measured on an annual basis.
So what happens if the impact is not reached fully in the first year, the target for the first year?
So it's over a 4-year period. And so the max impact, when they will get their 800,000 plus 100,000, so a total of 900,000, is 18,000 hours worked in the dev shop. And so honestly, the dev shop could return all the capital in year 1, or it could take them 4 years. And so it will be assessed on an annual basis, and whatever the number is, that it has been established that the unit of impact is worth $50 an hour, and that is based on the market rate of what companies are paying for this work. Now, the last mile can only pay the inmates about $17 an hour, and that's set by the prison. So interestingly, that delta will continue to fuel last mile's work after this initial 800,000. So if it's successful, they won't have to raise any more capital. And so if the web development shop is up and running, hours worked are happening. So there's no scenario where they're not going to get, they're starting to, build into that 800,000. So wherever it ends up, we're very bullish that they will hit that 18,000 hours. But if they don't, the investors are the risk capital. So they will take a loss. And on the donor fund side, those funds are sitting there. There's been a charitable write-off on day one. And so it's very important for people in this particular deal, that money won't be returned to donors. They will redonate that money either to another impact security, another nonprofit of their choosing. That doesn't always have to happen, though, in this case, because there were so many donors, and actually there was an interest to have the charitable write-off on day one, but you can imagine, with the donor advised funds that are sitting there that have the capital there, it can sit on the individual or on the foundation books until impact happens, and then money can be deployed. It really depends on who the donor is, how many donors.
Well, this is a tremendous structure. Now, one of the objectives you had was for the security to be tradable, to get a CUSIP number, as I recall. How are you progressing toward that objective?
It was really important for us for the impact security to have a CUSIP number. We want to plug into Wall Street. It is equally important that this is not seen as something that can be traded every day. That gets a lot of people very nervous. And so we don't really anticipate trading on this. It can happen. If it were to happen, we would make sure that it would just be around the reporting of impact so that it's actually tied to that. So that we think is probably further down the line when you have more impact securities and more of a market, which is our goal, to really create an efficient capital market for the nonprofit sector. I will say we're super excited. I'm not sure if your listeners know who's involved in this first deal, but it's some. I know I said there are 11 investors and 16 donors. That's a lot of people. It could have easily been one donor, one investor. And at the end of the day, we're thrilled to have 27 ambassadors. And they're some of our top philanthropists, from Richard Branson's Virgin Unite to Giving Pledge members Gordon and Lily Gund, to the San Francisco Foundation here locally, as well as on the investor side being led by Omidyar Network, Duncan Niederauer, the former CEO of the New York Stock Exchange, and a number of other philanthropists and foundations. So we're thrilled.
Well, it is an all-star group, it looks like, and we've had a couple of those folks on the show. They are remarkable people, and like you say, they're sort of all-star impact people. So
yeah, great.
Well, what is left for you to prove in order for this to become a big thing?
Yeah. We think about that a lot. We've been thinking about that for a while. And it really is, to achieve scale of a number of impact securities and to really prove that we think this is another tool in the nonprofit's development toolbox. It doesn't have to be the only way, but another tool. Similarly for the donors, it doesn't have to be the only way, but for them to really approach this as a new way for them to donate. And we, again, with this impact investing, there's a big pot of capital there that can really help for the ecosystem, for all of us to work together to try to solve some of our world's biggest issues. And so instead of doing one-off deals of impact securities, which could take a while, we have seen a real shift, and it happened with donors coming on board. And as I said, the 16 donors that we call our pioneers are a really big part of this. There was a change of behavior for them to donate in this new way. And so we have, for the last several months, been talking to some of those donors to say, okay, you and then you and your peers are coming together. We've seen in donor funds. I think there are about 35 donor funds on the market right now. And that is great and exciting that they're coming together on one issue area with much larger amounts of capital, $1 billion. From the Blue Meridian to Co-Impact to TED's recent announcement with the Audacious Project. But again, we see that we're really excited about that, first of all. And second of all, we would like to work with them, those existing donor funds, or create new ones to say, okay, what's happening right now is varying levels of due diligence, donate, and hope for impact. If you take a portion of your funds and have donor funds that deploy capital through the impact security, we think that could lead to more impact. So we are working with philanthropists, both individuals and foundations, around creating donor funds. And you can imagine, say, a $100 million donor fund in education that has 5 or 6 impact securities. It's really important still at the end of the day that the nonprofit has what they need over a certain amount of time. So obviously that all has to match up. But we believe that that's the way to really scale the number of impact securities, and have gotten a lot of enthusiasm from donors around that idea.
Well, the impact security seems like a great way to scale proven programs. How do you see the impact security?
On the last mile, they are proven to really be successful with the coding. And are really the darling of the prison system. If you go into San Quentin, it's amazing because they've seen a huge transformation from these incarcerated individuals learning how to code to even the culture. But this program that was funded, the web development shop, it's never been done anywhere before. And so we think that it really depends on the nonprofit. If it's a tried and true program, all the way to the exciting, this is brand new and very innovative. Of course, like tried and true can be very innovative too. But the most important thing really is that the nonprofit does know the impact they're trying to achieve, and we can help them with that. 1 or 2 impact metrics. We say that we can work with any nonprofit with measurable impact. But also, I mean, it sounds simple, but that they really dedicate the time and resource to work with us to get this done. And we do feel like we can get it done. We can raise more money more quickly at a lower cost of capital. So obviously we think it's well worth our time.
Katerina, what is your superpower?
You remember last time, I loved when you asked this question because we talk about superpowers a lot. I actually think it's how my co-founder, and interestingly, we call ourselves co-CEOs too, and we really think together we are the right CEO for NPX. So last time I told you communication. So I'll give you a new one this time, but I really do think it's a little bit tied to communication, but I love getting different groups of people or different individuals, connecting them through their passions, because I think we can't get any of this done without working together. I believe that so wholeheartedly, which is one of the reasons when I first met Lindsay 4 years ago and we're talking about this structure and how it brings together, the same 2 parties of the donor and the nonprofit, but this whole new group of investors. It's been a joy to work with all 3 of those groups to really try to move the needle here. So I would say it's bringing people together to try to create more impact.
Excellent. Well, Katerina, thank you for taking so much time with us today. We're so grateful to you and recognize you're busy and you've got to run. But before you go, please tell us how people can learn more about NPX and impact securities.
Yeah, great. So we just revamped our website to try to make it more simple and clear, and have quite a few press releases. And Andrew Ross Sorkin wrote an article in the New York Times about the launch of the first impact security deal. Our white paper is on there, and so it looks pretty simple on purpose. We're trying to engage you and know how nonprofits, donors, investors can work with NPX, but also there is some good detail there. But C. Schwab, SCHWAB at npxadvisors.com also works.
Fantastic. Well, Katerina, again, we thank you for being with us today, and we wish you every success in issuing more impact securities.
Thank you so much, Devin.
All righty, let's do some good.
Thank you for listening. This podcast was recorded via Google Hangouts on Air and is available at youtube.com/Devin Thorpe. Subscribe to this podcast on Stitcher or iTunes by searching for Your Mark on the World. Every weekday, Devin hosts a CEO, celebrity, entrepreneur, or other changemaker here on the Your Mark on the World show to inspire and prepare you to make your mark. Devin is a champion of social good, writing about, advocating for, and advising people who are doing good. He is a Forbes contributor who is a recognized thought leader in social entrepreneurship, impact investing, and crowdfunding. To book Devin as a speaker, visit devinthorpe.com. Learn more about Devin's work at yourmarkontheworld.com.